So Palantir was awarded an Australian Transactional Report and Analysis Center, AUSTRAC, renewal to support financial criminal investigations. Since 2017, Palantir has partnered with AUSTRAC to optimize their use of financial data in support of criminal investigations. AUSTRAC builds resilience in the financial system and uses financial intelligence and regulation to disrupt money laundering, terrorism, etc. And this is in Palantir Australia, speaking of subsidiaries. So we are proud to continue and expand our partnership with AUSTRAC and remain firmly committed to supporting their mission. AUSTRAC personnel are using Palantir software to identify national security threats and to detect and disrupt criminal networks, a real contribution to making Australia safer. So this was interesting because they're using Gotham and Foundry to integrate and fuse large-scale data across their enterprise. I didn't even know, again, that there was a Palantir Australia or that there was this AUSTRAC thing that was going on there. So any thoughts on this contract renewal?
Yeah, I think sorry, go ahead, Chris.
No, you go ahead, Matt. You start.
I was going to say it just goes back to their bread and butter, right? I mean, I think that this is what Peter Thiel and all them have really been working on since 2003 after they left PayPal. And they were like, okay, it's counterterrorism. We have this algorithm at PayPal that we're going to use to kind of ramp into seeing how we can detect money laundering and all these other things to help detect bad actors. And here you are, 20 years later, continuing that sort of journey and doing the bread and butter of what Palantir was kind of founded on. And I think a lot of people don't realize that this is really the bread and butter of where it started back in 2003 timeframe. And it's really transformed into Airbus and the BPs and the, all the not Johnson & Johnson, Tyson Foods and all these other places. But this is really like the core as to what Australia or what Peter Thiel and them really had envisioned for this. Yeah. And this is on the back of what just happened in basically Europe as well, where they're helping to try to, it's not exactly the same. This is more towards counterterrorism and stuff of the like, but it's kind of the same with respect to financials and making sure that liabilities and everything are kind of
in comes check. On the heels of the bank collapse, right?
Yeah.
Chris?
Yeah, I mean, this just goes to show that there are multiple use cases for Palantir. It's funny that we're talking about this right now, but this whole thing with SVB, FRC, all these things, they could have been prevented if they had Palantir integrated, where literally there could have been real-time data streaming from these banks reporting out every day what their balance sheets were looking like, what their risk exposure was to certain things, and they're reporting every day to the Fed. And I know that sounds like, oh, that's a really impossible task. But no, it's actually not impossible if you have something like Palantir integrated into your data sets where you can securely transmit the data. So yeah, and it's funny because what's his face? Chamath from All in Pod, he actually specifically brought that up. Like, oh, if this was around, then they wouldn't have happened. Like, yeah, we could talk about something. I'm gonna find the clip and I'm gonna play it. Hold on.
But is that too much like government interference?
No. From a regulatory standpoint, not at all. Not at all. If the health of the economy is at stake, and especially if the government
to bail them out when it all collapses, might as well.
Yeah, I mean, you are if you're an what's the word? Existential risk to the economy, then yeah, you should be willing to accept transparency. And especially if it's a safe and secure transparency with your own regulators, then yeah, definitely go for it. It's not like we're asking you to make public every day what your balance sheet are and that's posted somewhere where it can be monitored. No, you send it securely to the Fed, to the Fed, the FDIC. So the FDIC and the Fed know exactly what's going on. This way, even the Fed and the FDIC can model how much they can raise rates without damaging the economy. I mean, right now, Jerome Powell raised the rates to control inflation, but had no idea that this was going to happen, that the system would break. Why? Because guess what? There was no one monitoring this part of it, right?
Yeah.
So
do you agree with the 25 points, or do you think that it was just because he feels like he has to continue this narrative of, hey, we're going to be hard on inflation? They don't have another piece of data yet to really. Sorry, I know you wanted to move on to a different segment of it.
No. I think
it was good. It was good.
I think this was needed because there was already a bad month in January, so a lot of people were expecting the rate cuts. Had they not done the rate cut, it would have been a signal that, look, something fundamentally is broken with the economy, and more people would have been pulling their money out of the banks. That's one problem. If they had raised rates too fast, you might have seen collapses in other areas of the the financial institutions. Right now, you've got lending standards that are tightening like crazy. I think inflation's about to get its ass handed to it in the next probably 3-4 months. If you're looking at the data live that's coming out from all sorts of locations, you can see that there's a huge disinflationary movement happening in certain core goods and core services. It's just that it's not being presented because the Fed is lagging when it comes to this
Several
data.
months. Yeah. Are you talking about like mortgage applications and just like everything?
Yeah, mortgage applications, originations, if you look at those, like most of the buyers in real estate right now are transacting with cash. The number of mortgage applications is like, I think at almost like a 20-year low right now,
Yeah,
right?
I think last I checked, it was like the 2011, 2012 low, which obviously was a hangover from 2008, where housing prices had declined 20 to 25% since kind of like 2007, 2008 timeframe.
Yeah, and the other thing is, I would not trust Jerome Powell with his words at all, because even the Fed knows that there's a certain value to how you present yourself, and that can in itself be almost like a rate rise, right?
Yeah.
Where Jerome Powell comes out and says, "Don't expect rate cuts." But inside, I was like, this motherfucker's lying to everyone. He knows he's going to have to cut rates. And the bond market doesn't trust him either, because the bond market, people were buying up all the bonds. So you could see they went down. I was like,
no, I think that's a good piece of information that I don't think a lot of people, I don't know if it was like an interview prior to Wednesday or if it was on Wednesday's Q&A. I was listening to both kind of over the last few days. And he said just exactly that. He's like, there are things in the economy that were equivalent, if they occur, to being the same as a 25 or 50 point hike. So if something were to occur, like what we have seen with SVB, then why 25 points make sense as opposed to half a point, because those things are going to instill fear or slow the economy down more or create lending problems like you're kind of talking about. Restrictions is probably a better word than problems, that are going to attack inflation. And so instead of them using interest rate policy to do so, they can use those things to kind of compile on, and they don't have to take as much of an aggressive approach.
Okay, so this is Chamath talking about why maybe something like Palantir could have helped with SVB.
And I think that what we did after the great financial crisis was the regulators wrote down all kinds of new rules. But the crazy thing in 2008 were those rules were written on paper. And now we're in 2023, and these rules can be written in software. And so I think what it requires is some amount of tactical real-time intelligence that regulators need to have over those that they regulate. And I don't know why we're so afraid of demanding that the next time some of these complicated real-time laws are written in law, that they also need to get written in code. And I think that that's a practical solution. It should be the case that every bank that's supervised by the Fed has a dashboard that has all of the key levers that allows what you said, Jason, to happen, which is a real-time mark-to-market. Should those or should they not be disclosed to shareholders? That's a different discussion. But the regulators should have 100% transparency into how these organizations run, because, as Sachs said, they are an enormously critical institution that, at best case, after this fiasco, what we've realized is very poorly misunderstood by consumers. And that, at the worst case, is being mismarketed to us. Yeah. And I think that shouldn't be allowed.
We're also...
Okay. So when he said that, I was in my brain, I was just like, that's Palantir. He's describing Palantir. This is exactly what all these companies need. They have their data warehouses feeding right into Palantir. That data is then put in a secure way.
The governance of that data, that's a big issue.
Exactly. And it goes right to the regulator, and the regulator's already probably using freaking Palantir because they have federal contracts. So it's literally the same model that you have with the COVID tracking, the COVID supplies tracking, the COVID numbers tracking that the hospitals had to use. Develop a system very similar to that, but do it for the banks. So that, guess what? You as a bank, you have to adopt the software. You have to put it into your systems. So now all the data that you have every night gets sent, and the regulators are always on the know. They know exactly what's going on, what kind of risks that you're taking on, and that if you take on too much risk, boom, the regulators step in and say, hey, you're uncovered right now. You need to make sure that you're getting insurance on this product, or you're doing this to make sure that you're not causing a systemic risk. And even from the Fed's perspective, they can know, like, what are the ramifications if we do this? If we raise the interest rates by a quarter point, what's going to happen? Which banks are going to be in trouble? If we raise it by 50, which banks are going to be in trouble?
Yeah,
so
that's a
that
good
this way you can mitigate those, decisions and say, you know what? Tell the banks up front, like, listen, you need to get your capital ratios back up to higher amount, or you're taking on too much risk and you have an unhedged position, right? And basically, even if you needed to craft laws around that and change some regulatory regulations, like I said, these are the kinds of things that you really need to do. And I think Palantir would work wonders.
I really like what you said there, because I think a lot of, like, the banks, they might have some of that in their presentations, right? I remember when I was a big investor in Wells Fargo, kind of before the pandemic, and during the pandemic, I took advantage of it, and I've now fully sold out of that position. It was my largest position for a while, I think up until like mid 2021. But a lot of what they would talk about in the investor presentations, or just if you're following banks in like the 2018-20, there's these stress tests. And it's like this big black box. It's like, okay, everybody went through the stress test, everybody passed. It's like what? Like what exactly did they go through, right? Like what exactly did they, what's the stress, right? And obviously here we are now, like 3-4 years removed from that, when I was really paying attention to it, and some of these banks have now failed. So would they have passed the stress test? Did they pass the stress test? And I think, to be honest, I think that they said that they did pass those stress tests, but because the stress test didn't include what we're talking about, which is the higher, ever increasing interest rates, nobody really thought from a mark-to-market accounting standpoint that something like this would happen. And this is kind of something that wasn't really kind of thought of or predicted in those stress tests. But I think exactly what you're talking about, Chris, I think it's very prudent, because some banks are very traditional. They're brick and mortar mortgages. And so for those kind of banks, maybe you really only need like a 9% or 10% capital efficiency. But some of these more risky banks that are trading and, doing some other hedging and stuff of the like, they might need 13%, right? Like, instead of being this big black box, being like, you guys you need more than 9%. But 13% is like above average, right? So instead of actually having it just like on paper, kind of like what Chamath is saying, is like, maybe we should understand and have a dashboard to be like, with the assets that we have, we know for a fact we need liquidity of 9.6% CEF. Otherwise, our bank is going to go no bueno if interest rates are going up as fast as they are. Or somebody could say, well, we know we're a little bit more risky of a bank. We like to try to get more margin on what we're not, margin's not the right word. We try to get a little bit more leverage in there so we can make a little bit more return from our investing side of our business. So we need 11.5%. And that would actually have some data on that dashboard to kind of back that. But anyway, I digress.
It doesn't feel like over-regulation either. I mean, it feels like stuff that is necessary because it's an existential like a crisis if we don't have this knowledge. And if Jay Powell needs to not do 50 or 25 in March and delay it till May because those banks are getting extra capital to recoup, and then he can raise the rates, like, that knowledge is priceless. I mean, that can save an entire economy. Right now, it seems like he's just guessing, right? That's why 25, as we talked about, was just like, all right, we'll just throw it out there so we don't seem too hawkish, too dumb.
I mean, that just feels like, no offense, but like, that's kind of the stock market. Like, that's at the moment, like, that is kind of how the stock market operates. Is everyone's just trying to do their best. Everyone's just guessing and trying to push the limits until they feel as though that they're kind of running up to it. And then unfortunately, something like this happens. Interest rates go through the roof. And that's why we're seeing a lot of these no revenue sort of tech companies or no profit tech companies really start to get impacted, where before they were just going to the moon. And I think now that we're starting to get a little bit more rigor in the system, maybe is really, driving us a little bit more forward. I feel like a lot of those inefficiencies that we've seen across different industries and stuff of the like will soon start to be realized due to products like Palantir. People start realizing that every time they swipe a credit card using a Visa credit card, it's 2.5%. They don't see it, so they don't care, but the merchant cares because 2.5% margin that they get impacted by. Small things like that, selling a house, 6%. All these small little things will start to soon be realized because the data will be captured, and I think we'll slowly start to eat away at those things.